History of taxation in Nigeria dates back to even when the name Nigeria was not coined. Of course, then, tax administrators were the traditional chief tax agents. The modern taxing system by the federal government on Nigeria under its taxation arm, the Federal Board of Inland Revenue, or FBIR for short, could be traced back to the year 1939, when the Companies Income Tax Ordinance was created. Now, in 1978, the Task Force on Tax Administration under the leadership of Alhaji Shehu Musa formed the Federal Inland Revenue Service, FIRS for short, as the operating arm of Federal Board of the Inland Revenue. Now, joining me on ICAN on Air today to shed insights into these subjects is transformation within the ease of doing business and the innovations such as the TAXPRO-MAX is a seasoned practitioner and a knowledgeable personality. Wole Obayomi Esquire. Wole is the head of tax of KPMG in Africa and the head of tax, regulatory and people services of KPMG in Nigeria and the director of KPMG West Africa. We shall be unveiling more about this, our guests, later. And of course, we have more for you. We will be giving you, and I'd like you to pay special attention to that, information on adverts, where and what number you could contact to bring in your Of course, tax administration has gone through a lot of metamorphoses, and we will be unveiling very, very soon my guests who will come in to come and throw insights into this, how tax has evolved into the modern, within the ambit of the ease of doing business in Nigeria, and of course, some of the new innovations that have come. If you hang on a little moment, I will get my guests to come on, get him unveiled, and we begin to fire the questions. Mr. Wole Obayomi, you are welcome onto ICAN on Air. Nice to have you here.
Thank you very much, Aki. It's a privilege and an honor for me to be here.
Well, beautiful. Thank you very much. And I just trace the history of taxation in Nigeria up to the moment we are. And I know that in 2017, Nigeria issued a revised national tax policy. just very briefly, give our viewers an insight into the key issues in this tax policy.
Okay, thank you for that question. The Nigerian tax policy issued in 2017 was approved by the Federal Executive Council, and it was released to the public by the Honorable Minister of Finance then. Now, a tax policy is just a document that really defines a framework that provides the direction of travel, for a tax system in terms of, okay, what should be the complexion, what should be the coloration of the tax system? Again, what should we expect in terms of reforms that could be evolving, from time to time within the tax system? It's not a law by itself, but it provides a framework further to which tax legislation could be enacted, and tax administration will also be established. So in 2017, in that tax policy, the federal government articulated the canons of taxation, okay, the canons of a good tax system, and as accepted in Nigeria, okay, there's a canon of certainty, a canon of convenience, a canon of economy, and also canon of equity. Okay, so these are principles that a good tax system must satisfy. And from time to time, we see what government is putting in place in order to ensure that our tax system meets those criteria. Also, the policy stated that taxation will be used as an instrument for economic development of the country. Okay, because it's through tax that the government will generate the revenue to perform its public function. And with respect to that, it provides that taxation will be used as an instrument for wealth creation and generation of employment. Absolutely. And also that tax incentives will also be provided. Okay, that will be sector specific. It will not be directed at any particular individual. Okay, but for the sector, particularly sectors that government wants to promote. It also defines the roles and responsibilities of stakeholders. Okay, the government at the federal level, that's represented by the Federal Ministry of Finance as a policy-making organization, and it's to them that the policy was formulated. Tax administrators as providing customer service to taxpayers, and they're putting the structure in place, to ensure ease of payment of taxes and also reducing the cost of compliance for taxpayers. Taxpayers, reminding them of their civic duty of paying their taxes as and when due. Tax advisors and other professionals, for them to comply with the ethics of their profession in ensuring that they uphold the integrity of the tax system by advising their clients to comply with tax laws rather than to aid and abet tax evasion. Also, for the media and the advocacy groups, okay, to educate the public, okay, create awareness in terms of their civic obligations, and also call out, the government anytime the government goes overboard in terms of performing its obligations, as particularly the social contract which tax actually enacts in terms of providing taxes to people in return for the taxes that they pay. And for the Federal Ministry of Finance, one of the responsibilities mapped out for it is that it will establish a tax policy reform implementation committee. And I'm happy to say that that was actually done in 2019, 2 years after the policy took place. And it's through the work of that committee that Finance Act 2019 and Finance Act 2020 were prepared and enacted by the National Assembly. And Finance Act 2021 is currently in the works. So
great points, Wole. I mean, in broad terms, you've just enunciated to us those key issues. And usually the fear amongst the taxpaying public is that with this, should we expect to pay more taxes with this national tax policy, more especially when people talk about double taxation as one of the main causes of clogs in the ease of doing business?
Okay, well, it's not necessary to expect, pay more taxes, but of course, when it's necessary for government to increase tax rates, they will do that, just as it was done with VAT in 2020. But actually, since the policy was enacted, we've actually seen direct income tax reduced at some levels. Okay, for instance, the minimum tax payable by companies that either incur a loss or they didn't perform well to be able to pay a tax in a year, that's up to a certain level. Okay, the rate was reduced from 0.5% of their turnover to 0.25% of their turnover in finance act 2020. And that incentive was actually in response to the COVID-19 impact, given the fact that businesses were challenged as a result of COVID. And it's meant to operate for 2 years of assessment, falling between 1st January 2020 and 31st December 2021. However, in practice, FRS interpreted that to mean the accounting year, okay, falling within those 2 periods. Okay, so we expect that to further be refined in Finance Act 2021, given the fact that if it's accounting period that incentive will be enjoyed, it means that taxpayers will only enjoy it for 1 year. But the intention really is for them to enjoy that relief for 2 years. Then also, we've seen minimum tax earners exempted from income tax. Okay, that happened under Finance Act 2020. Also, for micro and small enterprises, in 2020, actually, the Finance Act of that year, Finance Act 2019, exempted them from income tax as long as their income does not exceed 25 million naira in a year. Then, for medium enterprises whose turnover is 100 million naira, that's between 25 million naira and 100 million naira, the tax rate was actually reduced for them from 30%, which every company pays in Nigeria, to 20%. So the policy really has not necessarily led to increase in taxation, but where necessary, government has been intervening in order to ensure that they cushion the tax burden of taxpayers. And
interesting point. We're going to get more into it, but I wanted to just pause a little, because you're talking about that Finance Act 2020 and some of the reforms that are going. I know in a few places, including manufacturers, including the private sector, they talk about areas of conflict, inconsistency, or ambiguity within that act. Now, let me ask you, do you think, if any, maybe 1 or 2 or 3, that the Parliament should revisit from that Finance Act 2020?
Yes, indeed. One area that comes to mind is a provision in the Finance Act 2020 that recognizes software development and acquisition and software applications, okay, that is the apps, okay, that businesses develop as a fixed asset for the purpose of qualifying capital expenditure for the claim of capital allowances. However, the law did not proceed further, okay, to provide the initial capital allowance rate and the annual capital allowance rate that will apply, okay? So that's a gap, that the future Finance Act 2021, should fill, in order to ensure that we don't just have software development and IT software infrastructure recognized as a qualifying capital expenditure, but we have the capital allowance rate so that businesses will know how to depreciate such assets from tax standpoint over the economic life of the asset. Then secondly is that Finance Act 2020 defines public character, okay, with reference to educational institutions, ecclesiastical institutions, and other charitable organizations, okay, as an organization that does not distribute its profits, okay, as being the entities that only qualify for income tax exemption. Now, to me, that's an anomaly, because Section 23(1)(c) of the Act, it says the profits of any company. So that Act anticipated that you make profits, and as a commercial, and it had a commercial entity in mind. It didn't have a not-for-profit organization in mind, because if you are not-for-profit, normally you don't even pay tax anyway. So if you are not to pay any tax, why would an additional exemption be given to you because you are not distributing your tax? So I believe very strongly that that provision is an anomaly to describe public character as an organization that does not distribute its profits to its members. Rather, public character as generally understood in all the fiscal systems of the world that I know is defined with reference to access, unrestricted and indiscriminatory access, to education. So as long as the doors of your educational institution is open, to any member of the public to enroll their students, of course, if they can afford your fees, then you should enjoy that benefit, even if you are a commercial enterprise. And education is really a sector that needs to be incentivized by the government. And that was the wisdom behind that provision that has been in our tax law since the 60s. But some people just woke up and feel that schools should be paying income tax because they think that they are making fabulous profits. But really, to get into educational business, for them to really know that it's not exactly so, because it's an investment that requires a long term before you can actually generate returns. So those are two areas that were like.
You can say that again. I mean, we just parroted some of the concerns that a lot of stakeholders have. Well, let's go into numbers and try and do some comparative analysis. We, federal government of Nigeria, like other governments, all depends, of course, depends on taxes to finance our activities. But in 2018, from the latest available statistics, the tax revenue was just 6.3% of GDP, whereas Ghana had 14.1%. Now, South Africa had 29.1%, Egypt 16.7%, while the African average was 16.5%. Now, what is your personal assessment, given this real statistics I've just given, of the FIRS tax administration in Nigeria since 2015? And I want you to marry that along with that the fact that can the contribution of tax to GDP should be substantially increased in Nigeria?
Okay, thank you for that question. First, tax to GDP ratio is a reflection of the compliance level in your country, particularly the culture of paying taxes. And I would say that that's a culture that actually faded away over a period of time, particularly after we discovered oil and we became dependent on the crude oil revenue to finance our budgets. When I was growing up, for instance, poll tax was payable by every taxable individual. And during that time, there was the awareness by people that they must pay tax. And if they didn't pay tax, they knew the consequences, that they could be jailed. Right? But there was a generational gap where we lost that culture. So we had a generation that grew up without really being aware of their fiscal obligations to the government, without being aware of the importance of taxation to the financing of government expenditure. Because oil was flowing, petrodollars was coming in, and as a result of that, the government also did not care to also enforce the taxes, both at the federal level and the state level. Okay, now it was when we started to experience an implosion in the oil and gas sector with oil price volatility and then significant drop in oil revenue, that attention was now being focused on non-oil revenue acceleration. So in 2015, for instance, we had a recession. I think it was from the second half of the year. So because oil prices simply imploded, going to as low as about $20. So how will government finance its public expenditure? So Mr. Fowler was brought in then, okay, to lead the initiative, and he brought the same aggressiveness, that he applied in Lagos State to escalate Lagos State revenue, to the federal, government. Now, so there was pursuit of aggressive collection. However, the challenge was that as long as the tax laws remain outdated, you can only do so much over flogging the tax laws, and they will not really accelerate your revenue. And that's was what happened. That while we saw an uptick, I think for a period of time, the truth was that really we've been at this 6% or around 6% tax to GDP ratio, for a long time, and it's become, really like a vicious cycle. During that time, so much attention was focused on tax collection at the expense of due process. Okay, so that's why that was why there were many suits filed against the tax authority. Then, for the most part, taxpayers they won their cases. Again, technology was not deployed as it should, and there was just no tax reform, during that period.
Well,
okay,
Mr. Obayomi, I know we can go on and on, but I want to quickly just dovetail into some other measures that we've seen in the world. The ease of doing business rating. Now, in 2018, the World Bank ease of doing business rating, Nigeria was rated 145 out of 190, whereas in 2019-2020, she ranked 131, I think it's 131 out of 190 countries, indicating significant improvement. I'd like to ask a few insights from you here. Now, in Nigeria, we have this huge insecurity, double-digit inflation, forex crisis, unstable monetary and fiscal policies. Now, does this index mean anything to Nigerians?
Okay, first, an average Nigerian may not relate to the World Bank doing business index because the things that are mentioned there are like ease of paying taxes, ease of registering title to land, ease of obtaining building permits, ease of business registration. They are not things that an average Nigerian typically does. So to that extent, it may not mean anything to them. What they really want is they want jobs and they want food on their table, which is of doing business will not necessarily give to them. Now you said that there was significant improvement from 145 to 131 over 190. I won't say that's a significant improvement, right? It was a marginal improvement. And the thing is that, look, even at 131, you are still uncompetitive because you are only just above 59 countries. So that will not make you a preferred destination, for foreign direct investment flows, which really the investing community globally, they look at the business environment in your country, which the index reflects and all of that, to invest in your country. So to me, it's not an achievement to be celebrated, because the truth of the matter is that we know that we still have challenges when we come down to us in terms of how business is done in Nigeria. However, it's a good thing. While World Bank have ceased, to do it based on the announcement that they made earlier this year, the thing is that Nigeria needs to continue to work on those indices, in order to ensure that the business environment is made better. The reality of the matter is that Nigerian business environment is challenged, and the challenges we have even been exacerbated over time. You mentioned insecurity, problems, for instance, FX instability, so many other things that have been very disruptive to business. We really need to fix this in order to make the business environment more supportive for business, both for domestic investors and foreign direct investors. Now, when that happens, the economy grows, people have jobs, they have income in their hands, their purchasing power is stronger, and they can afford the basic things of life. Then our ranking on the ease of doing business index will mean something to them.
Now, you buried that point. And of course, there are so many things that government can do differently to improve welfare of tax paying public, which you have just said. But I am sure it's not just Nigeria, maybe some other countries too look at this unusefulness in quote. And like, I have to agree with you that a marginal increase is not something that we should, continue to say Hosanna about. Do you think this seeming unusefulness for us, perhaps in Nigeria, some other sub-Saharan African countries, will be the reason why the World Bank have decided that they are going to discontinue the publication from this year?
No, not exactly, because the World Bank made a clear statement as to why they were stopping the doing business index.
Yes,
absolutely, yes. And essentially they attributed it to manipulation of the scores, by some countries that are gaming the system. They also didn't exclude, their own internal teams, from the abuse, of the process. And it was on that basis that they decided to discontinue the doing business publication, from year to year. So it's got nothing to do with what it means to an average Nigerian or to what you call on usefulness. The index report, I mean, it's not really particularly useless. It's very useful for you to measure yourself against peer countries to see how well or how badly you are doing, so that you can put your acts together.
You can say that again. You can say that again, Mr. Obayomi. I mean, what you do not measure, of course, you cannot manage, obviously. But I like to quickly just draw one or two attention of yours, and let me have you now. People have been talking about multiplicity of taxes at different layers, and that has been a problem in Nigeria. That is given. For instance, the Companies Income Tax Act, or what we call CITA, the National Information Technology Development Tax, that's the NITA levy, the Education Tax, Nigerian Content Development Levy, are all on profits. How can the ambiguities of tax laws and practices be reduced to eliminate, or at least minimize, this multiplicity of taxes?
First, I mean, we have to continuously reform our tax laws.
Right.
Okay. On the last time we reformed our tax laws until before the Finance Act 2019 was actually 2007. That was 12 years. And believe me, it was scandalous. Because an average country in the whole world where tax is actually valued, where the importance of tax is elevated by reason of the fact that it's a source of public finance. Every year, the budget is accompanied with finance bill, because the finance bill is the instrument through which the government will finance the income side of their budget. However, on our own part, for so many years, we focus on appropriation bill, which was about how you spend the money that you have not even made. But thankfully, I mean, the Buhari administration from 2020, when we had the first Finance Act 2019, after so many years, I mean, they've started the culture of accompanying the budget with the finance bill. Okay, it did that in 2021 for the Finance Act 2020, and now it's also made reference to it in the budget of 2022 that Finance Act 2021 bill will also be presented to the National Assembly soon. So it's through continuous tax reform that we can eliminate all the rough edges in our taxes and ensure that the problems that people are facing with the system are resolved. Then the other thing is fiscal federalism. Okay, the tax laws are clear as to who should tax what between the federal government, state governments, and local government. Every tier of government should respect the boundaries and keep to that. Okay, now for the federal government, which you mentioned, all the what I would call secondary company income tax. Okay, NITA levy, tertiary education tax, and then lately there's also NASENI levy, National Science and Engineering Infrastructure levy. Okay, that's been in the law since 1992, and then somebody woke up and said that okay, companies should be paying that, and it prescribes 0.25% of the turnover, not even the profits of a company, of the turnover. Mean that whether you incur a loss, you should pay that levy. Okay, for companies with minimum turnover of 4 million, okay, which the president administratively said should be 100 million naira with effect from this year. So all these, ancillary taxes, they actually increase the effective tax rate that companies pay in the end. So while we say that 30% is our corporate income tax rate, by the time you add all of this together, it becomes 32 plus. And that really is one of the highest rates, corporate income tax rates now in the world. So, so there's need therefore for us to really ensure that tax does not become unduly burdensome for businesses to pay as to the cost of doing business, and then makes the business environment unattractive for business. So, to me, those are two measures that can be done with a view to eliminating the burden of multiple taxation and then also eliminating ambiguities in our tax laws. It's about continuous tax reform year after year, and even within a year, if after we're not in Finance Act and find that there are some issues there, or there are some gaps that we need to bridge. We should also be able to introduce additional amendments in the course of the financial year. And not
excellent point, Mr. Obayomi. And like you said, continuous, consistent, focused will eventually get us there. But I want to now turn briefly to the National Bureau of Statistics. They carried out a survey in 2017, and they came up with a set of numbers to say that 41.5 million micro, small, and medium-sized entities are in Nigeria, implying that this informal sector employs millions of Nigerians. Two questions I want to ask you consequent upon this. How can we bring them into the tax net effectively? And then how can the nation improve the efficiency of tax collections generally?
Okay. To your first question on how we can mainstream informal sector. First is the statistics that the National Bureau of Statistics now published, okay, really presents a holistic figure, 41 point something million
41.5.
Yeah, businesses that are in informal sector. But tax at the end of the day is individualistic. Okay, meaning that we need data on each taxable person in the country. Okay, now so many databases have been compiled in Nigeria, and these databases they have no interface with each other. Okay, now I think NIN provides us with a good opportunity to actually be able to sanitize the database of Nigerians, because only when you have the data on individuals, that's when really you can track them for tax payment. At the same time, the linking of the NIN to mobile phone numbers, okay, is another great way, because Nigeria has a teledensity of about 104%. Okay, meaning that we actually have more phones than the number of people in the country. So in effect, we can use that data, because whoever has a mobile phone has an identity, okay, and also has a number. Okay, if we then tie that to a tax ID, then we'll be able to know who is who and be able to capture their data within the tax system. It's through that data that we can then begin to tax people. Then also, I mentioned tax education earlier on. That growing up, people knew they had to pay to poll tax, otherwise they would get into trouble. Now we had a generational gap. So there's need for education of taxable persons. In fact, that education needs to start from elementary school for people. Okay, so that they grow up, knowing what their civic obligation is to the government. And then also, government needs to also incentivize the informal sector. Okay, they need to make tax payments attractive to them. They need to make formalization of business attractive to them. Okay, so make it easy for them to register their businesses. Make it free. It may be give them some inducement, and with that, you capture them in the system, and then be able to enforce tax payment, going forward. And I must say also that the tax authorities must also be ready to do the hard work. For the most part, they focus on companies that are already compliant, individuals that are already tax compliant, because these are the ones that they can easily make money from. But really, they need to do the hard work of mining data, developing the strategy of also bringing the informal sector, to the tax net. And and if it is said that the informal sector in Nigeria is 65% of the economy, it means that there's actually potentially a higher yield than what they're currently collecting from the rest of us who are 35%, of the economy. So there's therefore for hard work to be done in that regard, and tax authorities must be ready to do that, rather than just do the easy way of enforcing taxation against companies and individuals that are already within the tax net.
Super, Wole. You could say that and say that again and again and again. I like to cut the tax authorities from slack.
Now, your second question, in terms of how we improve the efficiency, okay?
Of
tax collection system. Okay. Strengthening the tax authorities, okay, the personnel of the tax authorities, upgrading their skills, giving them the tools to work with. Again, we need to deploy technology, okay? Through that, we can mine data, and also making it easy for taxpayers to file their tax returns and pay their taxes. And of course, we need to adopt a risk-based tax audit approach, rather than a system whereby tax authorities just focus on those businesses and individuals that are paying taxes. And they should do a risk profiling of taxpayers, and then pay more attention on the high-risk taxpayers, or those who are not paying taxes at all. Through that, I believe we can improve on our tax collection within the country. And of course, earlier on, I mentioned about social contract. Government must also give something, but people must see it visibly. It's true that we can promote voluntary tax compliance in the country, which actually is a hallmark of tax collection efficiency.
Yes, and I mean, that is obvious. Your video is slightly off, but notwithstanding, we can still hear you. Might be some one or two technical faults. Like you rightly said, you know, I mean, you just took that off. Something that is in my mind. I like to cut, you know, the authorities some slack. Right. We might not have moved in quantum velocity, but somehow technology has come to bear, and in our own little way, just try to make sure that we move with such technology. There is this introduction by the Federal Inland Revenue Service when they launched the TAXPRO-MAX initiative. TAXPRO-MAX. It's not jailbreaking. Oh, but what is this TAXPRO-MAX initiative? How does it operate? Just a brief
right. Right. I mean, it's part of what we've been talking about in terms of a technology deployment for ease of tax administration. Okay, this is really long overdue, and if anything, TAXPRO-MAX is just a basic tax technology. I mean, other countries have gone very far. I listened to the South African Revenue Service, an official last week at a seminar, where I said that, you know, right now, you know, they are deploying robotics, artificial intelligence, machine learning, okay, for their own tax administration, data analytics, and all of that. But TAXPRO-MAX that we have in Nigeria is just the starting point, and that is it has their forms that taxpayers can fill to register online to put their profile there, and also web forms that can be filled, okay, when they are filing their tax return to provide tax information by which their tax liability can be computed, and then it will also generate for them a code, which they can use for the purpose of making their tax, and by which the tax authority will tie that to their tax assessment. So that's basically what is done now. They can upload documents and all of that. So it's a good thing. It brings transparency to the tax system, and also it will improve efficiency of tax collection, because it automatically charges you penalty and interest if you don't pay your tax or file your tax returns on time. And the system is also so rigid. There is no flexibility. There is no way out for you. So it's a right way to go, but we still have a long way to go. However, it's good that we made a start.
I agree with you. It's good we make a start, no matter how slow, no matter how crawling. But like we say, in management of change naturally will come in. Do you think this initiative of the TAXPRO-MAX has shut the door against persons who still desire to file manual returns?
No, not at all. As a matter of fact, there's provision there that if any taxpayer is encountering challenges, okay, you can go to the tax office where your file is, your local tax office, and the tax officials there, they will help you to upload your data, from their office, and then you'll be able to pay your taxes and when due. So it's not, it hasn't shut out anyone. The authorities themselves recognize that there could be teething problems, and they have made provision for manual filing through their office. Based on the information in your tax returns, your data can then be uploaded, and you can also be on the TAXPRO-MAX platform.
Fantastic point, Mr. Obayomi. I like that, and I hope the tax-paying public will key into that and then move as fast as we expect them to move. The ICAN-ngr that was just launched got on, and then of course we had, in quotes, hackers coming in, and the thing has one or two issues that needs to be resolved. Now on TAXPRO-MAX, are there any IT and security issues associated with its deployment now?
Okay, right. from the IT side, I would say it's about internet penetration. Okay.
Oh yeah.
I think data as of 2019 showed that we only have 34% internet penetration in Nigeria, and also data shows that medium, small, and micro, small, and medium enterprises only have only 50% of have access to data. So, if you require them to therefore migrate to a technology platform, if they don't have the technology, then that will be a challenge. Then also issue about bandwidth, okay? Because occasionally to some of the electronic platform of some of the tax authorities actually, they go down, or taxpayers too also due to bandwidth challenges may also have difficulties also filing their returns as well. So those are the challenges that I see with respect to the IT. However, it's the right way to go, and thankfully we're also building the infrastructure backbone, for data connectivity in the country. So hopefully, that becomes a thing of the past as we have more and more internet penetration and bandwidth capacity. In terms of security, first is, data privacy, particularly from the point of view of okay, how your data is used. And we know now there's data privacy regulation in Nigeria. So question is, okay, after you've shared your information, will it be used for any other purpose other than the purpose for which you have provided the information, which is for tax purposes? And aside from that, cyber security, and that's from the point of view of the tax authorities, that they also need to ensure that their electronic platforms, okay, are built to last, and they'll be resilient, and they'll be able to really withstand any attempt to hack into the system, just as we have experienced with the ICAN-ngr that you mentioned earlier on.
That's right.
Cyber security will really be a key priority, and I'm sure that tax authorities must be mindful of that, because they can't afford for their system to be shut down or to be penetrated by hackers.
Very beautiful point. I am going to ask you to just hold it on there, stay on. On this TAXPRO-MAX, we're going to get some more exposition, and I'd like us to go on break. To our online participants, thanks for your questions. Please keep the questions coming. We'll take as many as we can within the time frame that we have. Please stay connected. We shall soon be back.
Thank you. See you.
Thank you very much for staying on with us. In the first half of questioning that I've had to put Mr. Obayomif through, he has told us quite a number of expositions, knowledge that he has shared in terms of tax administration in Nigeria. Yes, we've come of age, but there's still a lot of mileage, kilometers to cover. And we are just talking about the TAXPRO-MAX, one of the initiatives, which he said is still at its rudimentary stage, expecting that more and more people will keep on. I'd like to quickly just mention to you again, our online viewers, during the interlude, you saw the advert numbers. Please take note of those advert numbers, call us, and ICAN on Air is poised to take your goods and services to the nooks and crannies, not just of the professional world, to all consumers that matter on our globe. Mr. Obawale, you are welcome back. I'm still talking about
Thank
this.
you.
Yes, thank you. This TAXPRO-MAX revenue leakages in all aspects, from production to operations to borrow of public procurement. We talk about leakages. In fact, the Office of the Accountant General comes out with issues surrounding the fact that, yes, we are not sure what we are totally producing in an omnibus kind of industry like oil and gas, amongst others. Will the TAXPRO-MAX Pro, what is likely to be its impact on helping to plug revenue leakages? Just briefly.
Okay. One area is timing of filing tax returns and tax payment. Okay. I think in the past, people could really play with the numbers or try to game the system. But with TAXPRO-MAX, where you have to mandatorily file your tax returns, okay, and at a particular time. If you don't file it at that particular time, whether it's VAT or income tax returns, then penalty and interest are automatically assessed.
Correct.
Okay. So what that means is that people will endeavor to pay their tax promptly, and thereby that avenue for revenue leakage in terms of lead time between when people file their tax returns and when the tax authorities come to conduct tax audit. Because then that's only then that they will know that a taxpayer has defaulted in paying tax returns on time. But with TAXPRO-MAX now, if you don't file your VAT returns by the 21st of January, by the 1st of the subsequent month, then it calculates penalty for you automatically. However, if it was in the past, until the tax authorities come to do a tax audit, they will not know that you are delayed, or they will not be able to assess the penalty and interest that is due. So that's one thing that he has done. Then also, I believe that the system is foolproof in a way, in the sense that once you file your returns and then your tax payable is determined, a tax payment reference code is issued automatically, and use that to make the payment in the bank, and that will again be linked, to your TAXPRO-MAX profile. Okay, so that there's no room for leakage, through that avenue. So I would think that this is one way by which real-time tax authorities can capture the tax payable to them, and then opportunities for revenue leakage are really now limited. Given what tax authorities have done.
Online real-time, Mr. Obayomi, you can say that again. But another area that I like to just briefly touch on is what do you think will be the justification for making the Nigerian Naira the initiative's only reporting currency?
Well, that is actually for now. Okay, because there are tax laws that and all of that, and corporate income tax in the oil and gas industry, because they pay their tax in foreign currency. As you know, with all technologies, okay, you make a start and then you scale up. So I believe this is just the beginning, because the FRS recognizes that, and that's why tax returns with foreign currency payments are currently required to be filed manually. But I believe the next phase is for them to now roll out the portal for the FX tax returns. So in a matter of time, that will be done, and we'll close that gap.
Excellent. And you just mentioned about the oil companies. I also know that tax returns by insurance companies, well, upstream, basically gas companies, the TAXPRO is not yet configured for them, and you already mentioned it. If so, what are these companies expected to do to file their tax returns?
Well, currently, they have to. The status quo will continue in the sense that they go to the tax office to file their tax returns. But with reference to the insurance companies that you mentioned, actually now the TAXPRO-MAX has been upgraded to allow insurance companies to file their own tax returns online. So that's a new development.
Yeah, that. And I would then ask you again, Mr. Obayomi, in your view,
yes,
should we worry about the ratio of tax revenue to GDP, or worry more about what the government is doing with the huge revenue it earns from taxation? Well, in relative terms, are the citizens getting value for their taxes? And somebody actually even mentioned that trust and confidence is lacking. What's your view and insights to this?
Okay, we should worry about it too. The tax to GDP ratio, because World Bank or IMF, they've determined that for you to really have a sustainable public financing structure and system, your tax to GDP ratio must not be less than 15%. So if you are still hovering around 6%, it really means that we don't have a sustainable tax system. So everyone should worry about that. And the only way we can scale that up is first is the economy must grow, businesses must thrive, people must have jobs, because it's only through employment and that individuals will be able to pay their personal income tax, and businesses must also do well, make profit before they can pay income tax. Also, is the volume of transaction in an economy that will determine how much VAT or withholding tax will also be paid. And those things, yeah, they tie directly into the tax to GDP ratio. So we must get the business environment right. Also, of course, we must also worry about what government does, okay, with the tax that we pay. Okay, so because tax payment seals a social contract between the taxpayers and the government. And we can't say, okay, because, okay, there's corruption in the system, there's revenue leakage and all of that, therefore we should stop paying tax. No, if you stop paying tax, then government they will not have the money, to be able to do what they have to do. And even with the tax that we're still paying, government still has to borrow significantly, and we're all crying and shouting about the unsustainability of the percentage of the budget that's been spent on debt services.
Quite poignant, Mr. Obayomi.
Yeah,
time is not our friend.
So we should demand accountability.
Yes, accountability, of course. That's why we
it's true that we can bridge the trust deficit. That's the only way by which we can address the trust deficit.
Accountability, the audits that you mentioned, the technology that we should deploy, and then, of course, we can build the trust deficit. I like, unfortunately, time is just not our friend. I like your last word, to our guests. On ease of doing business, TAXPRO, and the administration of taxation in Nigeria to date.
Okay, we are all stakeholders in the tax system. We are all stakeholders. As taxpayers, we should pay our taxes. Okay. As professionals, we should advise our clients to be compliant with the obligations with the tax authorities. There are tax planning opportunities within the law that taxpayers can take advantage of with the way to manage their tax affairs without necessarily really evading the obligation, to pay taxes. Right. Excellent. And also we should demand accountability from the government, like I mentioned. Okay. Yes. And that's the only way by which you can bridge the trust deficit, which is very deep in the system. And as long as we have a trust deficit, people will not be happy to pay taxes. And if they're not happy to pay taxes, the government will not be in a position to perform its public service responsibilities.
Mr. Obayomi, be sure, time is not enough for us to explore all other areas. We are going to be calling on you sooner than later for you to make more exposition. Thank you very much for all the insights you have given. I also want to thank our online guests for their active participation and their questioning. I'd like to quickly just also mention that the ICAN on Air has moved to unveil and share in knowledge as part of our Old Charter, New Chapter initiative. I look forward to have you join us at our next episode, which is going to be on Tuesday, November 2, 2021, at the same time, 6 p.m. West African time. And the guests we are going to be fielding will be Yomi Okegbe-Enro, FCA. Yomi Okegbe-Enro is partner and West African tax leader in Deloitte. And we are going to be looking again something similar into technology and Nigeria's revenue challenge, requiring making sure that we harvest the informal sector and the untaxed into the tax nest. Please tell your friends and associates to join you for yet another session. It's going to be very enlightening. I'd like to leave you with these immortal words of Benjamin Franklin, and I quote, "In this world, nothing can be said to be certain except death and taxes." End of quote. Be the change that you want to see, and I remain your host, Akin Fatunke ICAN on Air. Social Diary will follow as we now zoom out. Thank you for participating. Bye for now.